What if I told you that you don't always need a huge down payment or perfect credit score to purchase real estate? I know that's gonna get your attention. Most people believe the only way to purchase a home or investment property is by getting a traditional mortgage through a bank. But that's not true. Today, I am breaking down some of the most common creative financing strategies that experienced investors and even some everyday home buyers they use to acquire property. By the end of this video, you will understand how these methods work, who they work best for, and the risks you need to know before using them. If you're new to the channel, I am Robert Jeff Johnson, a realtor serving Fort Bend County and the greater Houston area. I help buyers, I help sellers, I help investors make informed real estate decisions. Let's get started. What is creative financing? Creative financing simply means buying real estate using methods other than a traditional bank loan. Instead of relying solely on a lender, buyers and sellers work together to structure a deal that benefits both parties. Why is this becoming more popular? High interest rates. Also, you have tougher lending requirements. You have investors looking for flexible options. And you also have sellers who want to attract more buyers. Creative financing isn't about avoiding responsibility. It's about finding alternative ways to complete a real estate transaction. Strategy number one is seller financing. One of the most popular strategies is seller financing. Here's how it works. Instead of borrowing money from a bank, the seller becomes the lender. For example, a home costs $300,000. You and the seller agree that you'll put down $20,000 in a down payment. The seller, they will finance the other $280,000. Your monthly payments go directly to the seller according to the terms that you both agree on. The benefits of this is easier qualification, also have flexible down payments, you get to closing faster, you get to negotiate your interest rates. However, everything should be documented by a qualified real estate attorney or a title company just to protect everyone that's involved. Number two, subject to financing, also known as subject to. The second strategy is called subject to. This means you purchased a property while the seller's existing mortgage remains in place. So instead of getting a new loan, you agree to make the payment on the seller's existing mortgage. Let's say the seller has a 3% interest rate. Today it's closer to 7%, but that's different. Rather than replacing the great loan, you take the control of the property and continue making payments on the existing mortgage. This strategy is often used by experienced investors, but it's important to understand the legal finances and the financial implications, including the lender's due on sale clause. Study it, make sure you know your due on sale clause. Third is lease option. Another creative strategy is called lease option. referred to as rent to own. You lease a property today while securing the option to purchase it at a later date. A portion of your rent may even be credited toward the future payment. This strategy can benefit buyers who need time to improve their credit score. They need time to save for a larger down payment, and they can lock in today's purchase price. It is also attractive to sellers who want steady income while keeping a future buyer in place. Next up, we have wraparound mortgage. A wraparound mortgage is another form of seller financing. The seller keeps their existing mortgage while creating a new loan for the buyer. The buyer makes one payment to the seller. The seller then continues paying their original mortgage. This can be beneficial when the seller already has a low interest loan that they don't want to pay off. Like other creative financing methods, this strategy requires careful legal guidance. Is creative financing right for you? Creative financing isn't for everyone. Traditional financing is still the best option, but creative financing may make sense if you're self-employed, you have strong income but don't meet traditional lending guidelines, you're an investor, you're purchasing a unique property, or you're working directly with a motivated seller. Every transaction is different. Before signing an agreement, work with a knowledgeable realtor, a real estate attorney, and also a qualified lender, just to understand the legal and also financial and the tax implications. In closing, creative financing can open doors that traditional finances sometimes can't, but it's not a shortcut. Every strategy comes with benefits, responsibilities, and risks. The key is understanding how each one works and making sure it's the right fit for you and your situation. If you're thinking about buying, selling, investing, leasing, Fort Bend County, or anywhere in the greater Houston area, I'd be happy to help you explore your options. If you found this video helpful, give it a thumbs up, subscribe to the channel, also leave a comment below, letting me know which creative financing strategy you'd like to learn more about, and I will reach out to you. Thank you for watching. I'll see you on the next video. And as always, remember, this is everything Fort Bend County.